Hello, hello, hello. Welcome, everybody. Try and get my camera on straight. Straight enough. Welcome, welcome, welcome. Let me make sure to mute all. Post in the updates channel. We are live. Share my screen. I think everybody should be muted at the moment. All righty. There we go. All right. Well, welcome, everybody. We'll wait just a second before we actually get going. Welcome back. It feels like it's been a while since we've met. It feels like it's been a while since we've chatted. It has been a few days since our last lesson. Hope everybody has had a good weekend and a good start to the trading week. It's been a tricky one. I know that there has been some solid opportunities. I know some people have executed and been able to walk away doing well. And I know some people have struggled. So hopefully tonight at the end of this evening, you have a better grasp on charts combining all of the things that we've talked about than you feel like you ever have before. That's really the goal of these last three lessons, is that I want you all to be walking away from here from a chart perspective with a new perspective, like a new mindset, right? A completely new approach, a new way that you view charts, and ultimately in a, I don't want to say better way, but better way than you had previously viewed them, right? Now, the other thing I want to note before we get started, there's two little housekeeping notes to cover. First things first, just because we have finished tonight's lesson after tonight. Now, we talk about this in the very beginning of the kickoff webinar. I recommend that people wait at least until the end of this lesson to trade or to put any actual risk on. Now, I know that no one listens to me. Maybe like 5 or 10 people listen to me and they don't trade. But the majority of you have been trading through the learning, which can have its ups and downs. What I will say is that even though we have finished lesson 5 tonight in the end of it, and really, well, of course, in lesson 8, we're going to cover a few specific details like how I get my watch list, what names I'm doing, what I'm doing pre-market, my routine, all that. By the end of this evening, from a strategic perspective, you really will have the keys to the vehicle to be able to understand charts the way I do. That being said, you shouldn't expect yourself to have the screen time and understanding and knowledge that people who participated in Mastermind 3 or 4 or 5 have, right? Or that I have, or that some of the mods have, or that the team members have. Like, it's going to take you time to understand this all. And I'm sure that that has hit a few of you very really over the past few weeks, where you've tried to trade through what you're learning. You've seen it work and you've seen the power of what we've been talking about, but you've also gotten your butt kicked a little bit because you didn't know the full system, or you, for whatever reason, right, you ended up kind of getting a larger loss than anticipated. My advice for everyone is take it slow, right? Take it slow. At the end of this evening, you are going to have the complete strategic keys to that vehicle like we've been talking about. Now it's just a matter of time of implementing it over the course of the rest of your life, right? You have a long time left to understand the system, to get through it. While you'll have the keys tonight, while you'll have all the information, I fully expect questions going forward. I fully expect clarification stuff going forward. I fully expect all of you to be posting charts going forward saying, okay, I thought this about here. I was thinking this about here. Was I on the right track? Was I on the wrong track? What about there? Do we think that I was out there? I expect this to be ongoing education for the rest of your life. There's a reason we have the mastermind section for the rest of your life. There's a reason that you can see that we still answer questions even after your class has finished, right? Like, it doesn't ever really finish in the sense that there will always be questions. So just because we're finishing lesson 5 tonight, please do not go running out blasting every possible fucking trade that you see tomorrow. Take it slow, right? And for those of you who haven't taken it slow so far, I have a feeling that you wish you did. And for those of you who have been taking it slow, I promise you, just that's the right move. And I am proud of the discipline that you have showed so far, because truly this program is meant to be taken as a whole, right? And after the fact is when you start implementing this stuff. you've had a couple of pieces of the puzzle so far, but tonight will hopefully clarify a lot more of that pie, right? So the other note and little housekeeping thing is tonight is kind of like Mastermind Christmas in the sense of a video drop. So as soon as tonight's lesson is over on Kajabi, what will be published, I uploaded them all to Kajabi today. What will be published is Mastermind 2, 3, 4, 5, 6. 5 different lessons of this particular same lesson that we are covering, but all of them with a different chart example you'll have access to. I ask that you watch all of them. Now, you can watch them on 2x speed. You can skip the beginning part until where it starts to talk about the actual chart examples. But I give those to you for a reason. I hope and expect that you watch all of them because this is a very dense subject, multi-time frame analysis. And I believe most educators don't do the full deep dive that should be done on it. And in order to do that, it's going to take several different examples, several different charts. It's going to take a deeper understanding. So I want you all to actually go back and watch all of them. Right now, again, the parts that us is repeat the slides like this. You can go ahead and skip forward part of that, right? But the chart examples, I want you to really give it your all, right? And fully listen and fully go through all of them. Not only will you have 5 previous classes of this particular lesson, the end of tonight's lesson, you will also have 2 separate bar by bar lessons, which is where we'll go in depth. I go in depth breaking down each 5-minute candle of a particular chart. We do that twice, once for Tesla, once for the SPY/ES. Both of those have been uploaded. They'll be published. They're just sitting in the drafts right now of Kajabi, as well as a meta trade review, which is where I screen recorded and or I recorded my face and recorded the chart as we were going through a meta signal from I think it was sometime last year. But walking through the process of what I was thinking in that trade, what I was doing, and it really is a good example of how I manage a position sort of live, because there was a lot of time where I was kind of letting the position work and taking a step back and was away. And I forgot that I was recording myself a ton, right? So so you have 8 different videos that you have access to as soon as tonight ends. And again, there are bonus videos for you all. The program that you paid for is the 8 lessons you're going to get, but these bonus lessons, in my opinion, will take your trading to the next level, right? And it's important that you spend the time to go through them, right? I give them for a reason. So I don't think I'll have to convince anybody. I think that most people are eagerly looking forward to going through and watching more bonus videos, but I highly recommend that you put the time into them, because some things that I might mention in lesson 5 from Masterminds 5 or 6 or 3 or 4 might not be mentioned in this one. Something I mentioned in this lesson might not be mentioned in one of those, just because it's a very dense topic and you can cover a whole lot of stuff, right? And it's hard. The other ones, I've figured out a systemic way to teach it. This one, I've always done a different chart example. So make sure you go through and spend the time to watch them. All right. So that being said, on tonight's agenda, we are going to be covering multi-time frame analysis as well as failure patterns, which we have not talked about yet. We're going to be tying our technical system together a little bit and designating 4 rules that we look for prior to entering a trade. We are then going to review some charts from today, Tesla, SPY, and DKS, and talk about them in relation to multi-time frame analysis and how those different time frames impacted each other, right? So first, as review, we should all be relatively familiar with this by now, but we approach the market completely different from how most traders do. Rather than trying to force a predictive approach on the market, we created a technical triangle offense system in which we react to what the defense, the market, is giving us, right? So we have a set of reactive rules that we follow. However, we do not force a EMA cross or MACD or a bull flag or calls above or puts below. We do not force any of that on the market. We simply allow the market to show us what it is doing and react to it, right? So with that, we have the 5 rules that I sear into your brain throughout the course of these 3 lessons. I want these all to be memorized, and then not even in the sense of like textbook memorized, but I want when you all start watching and seeing charts throughout the day to start noticing these things subconsciously, right? And you start paying attention to them subconsciously. First is that the market is always either trending or ranging. Excuse me. There is no in between. We're either trending, ranging, and usually it's trend followed by range followed by trend again, right? So we are always, always, always in one of the two. There is no other circumstances that can happen on a chart. It's either has a trend up or down, or it's in a range / consolidation period. Now, our second rule is that the break of a previous candle high or low should get continuation in either direction. We have should in an emphasis there, and we're going to talk about that a lot more tonight, because when what should happen does not, we take that information as a clue, and that is often seen through failure patterns. Failure patterns can present some of the best trade opportunities in the world. In reality, the market, whoever it is out there that moves the market, big money or whatever you want to call it, right? Whoever is out there that moves the market, they know that day traders exist. They know what day traders look for, and they often trap day traders intentionally. That's why oftentimes you'll see something spike above the pre-market high and then start selling off. It's because whoever is they, I don't know who, but whoever is them is pushing the market and so is pushing that asset to sweep those overnights and fail, right? And trapping longs above that high, right? So in my opinion, these failure moves can often lead to a big move in the other direction. We're going to talk about those much more tonight. Next is that candle analysis is applicable on all time frames. While candle analysis is applicable on all time frames, I would like to note the only thing that's like a really key takeaway is that we mark our levels on the hourly. I had somebody ask a question asking us to check levels earlier today, and they showed us like a 5 or a 1 minute or a smaller time frame chart. And I want to make sure that we're all clear. Everything from the level system that we taught in the last lesson is only on the hourly chart. You can sometimes look for those trend changes on like a 15-minute or a weekly. You can look for them and they may come into play. However, all of our levels are derived from the hourly chart. That's where they come from. So if you're wondering like, hey, where do my levels, where do I check them, all that, it's all from the hourly. Everything we talked about in the last lesson is from the hourly. If you're having confusion on the levels, and I mean not like small confusion, like is this a level, is that not, on a couple of things here or there, but like generally broadly you are confused on the levels, I would really encourage you to go back and rewatch that lesson at least once or twice, because we really do go through like day by day, like 13 days or whatever it was, looking at each level, then removing it, all that. So I would encourage you to go back, and if you're still confused after a rewatch, like broadly on the concept of how we find them, make sure to reach out to me. But I think that based on these questions that I'm seeing, the majority of people are pretty clear on how to get the levels, the rules, and all that. Of course, there will be from time to time stuff like, oh, I want to make sure, is there a level here? Is there a level here? Is there a level here? Of course, never hesitate to ask away, and never hesitate to post your charts asking what we think of them. But I think everybody's grasping the level concept pretty well, right? That being said, candle analysis, again, back to our rules here, is applicable on all time frames. So the same buy setups that you will see on a 2-minute chart are valid on a daily chart. They just create different types of trades, right? An entry off a 1 or a 2-minute chart oftentimes is a scalp, a day trade. Something off a daily chart would be more like a swing trade or a longer time frame day trade we're holding throughout the course of the day. Our last rule is that markets move from level to level. And I want to just ask, this isn't for Instagram or anything, this is just for me. I'm just purely curious. Over the course of the last week, have you all seen, or not even last week, it's only been 4 days, but since the last 4 trading days, have you seen the levels in play getting reactions and things bouncing off them and rejecting and them actually holding their form, right? All right, awesome, right? It's crazy. Again, that's not for, it's just for me, right? Because truly, as soon as I like developed and like saw them, right, like, and you learned them, it's like it gives you a new perspective on charts, because you're just like, okay, they make sense now, right? Like I know that something has a purpose. Now, they're not perfect, right? And you should never expect a level to be perfect. I saw someone came in and I saw that, yeah, it blew past it, right? It's always going to be levels that end up getting broken past. For example, I'm staring in the background. I have a chart up right now, not on this screen, but on a different screen of DKS. DKS blasted right through its level today, right? So things are always going to end up making moves through levels eventually, but the accuracy on them is quite insane. And for Tesla today, which we're going to cover that chart, 191.86 was scary accurate, right? So it's important to know though that really the levels are not just like, again, if it was just knowing the levels, right? If it was just knowing the levels, then everybody would be rich, right? Everybody would completely have a full understanding of 100% of everyone would just be rich, right? If it was just buy above and sell below, right? So you have to understand that markets move from level to level. They have an intentional move, and our purpose is to try and capture some of that move from one level to the next level, right? All right, so with that, we have 3 pillars to our strategies, my friends. We have candle analysis, which is finding a buy or sell setup or a failure pattern. We have trend analysis, which we talked about in lesson 3, and we'll continue on tonight as trend analysis includes multiple timeframes. And then we have our levels, which are derived from the hourly chart. And we have our previous lesson super in-depth on that, right? So these are our 3 pillars. And tonight, what we are going to be covering is failure patterns, as well as multi-time frame analysis, because trends are different on different time frames. Then we have our 3 rules really quickly for support and resistance. Again, just to sear into your brain. First, we have our knock-knock rule. This tells us that the more times a level is tested, the more likely that it breaks and breaks with power. We have the Uno reverse rule, which tells us that once broken, a previous resistance or previous support should act as a support or resistance upon being retested. When a previous resistance is broken, should act as support. When a previous support is broken, it should act as resistance in our Uno reverse principle. And our final one is hit the body. In all of the lesson that we covered last evening, we were hammering the table, screaming, when we mark our levels, we mark the open of the candle that changes trend. The open of the candle that changes trend. That is where we find our support and resistance levels from. Then we have our candle analysis review here. Again, for buy and sell setups, we have these are mostly primarily our method of entry on smaller time frames. We'll talk about the difference between time frames tonight. But these are our method of entry on with trend plays, right? So on with trend plays, on a downtrending move, we would be looking for a sell setup, right? We look for something that has a rally, right? During a downtrend, we wait for a rally to establish resistance in a bar to take out the previous bar's low, right? For this example, for buy and sell setups, we'll have 2 different candles here that we're going to want to pay attention to, the signal bar and entry bar. For us, the signal bar acts as the bar that signals to us that a trade is forming, and this bar provides our entry and our stop loss. The entry bar is then the bar that we use to enter the trade. So this is an example of a sell setup that triggers and ends up getting follow through, right? So the entry is below the low of this signal bar right here, and our stop would be above the high of our signal bar right there, right? So for sell setups, our entry is below signal bar low, our stop is above signal bar high. Right, let me clear that off real quick. So that is a sell setup for us. Then we have buy setups, right? These, again, most applicable during with trend plays. During an uptrend, we wait for a pullback to establish support and a bar to take out previous bar's high. The signal bar to us signals that there is a trade forming, right? This bar provides both our entry and our stop loss. And our entry bar in this example is the green bar here, which is the bar that we use to enter the trade. And we do not wait for a candle to close on that. We take it on the break above the previous bar's high, right? So now with buy and sell setups, that is one main way that we use to find entries. Another way that I'm sure many of you have seen us talking about in the chat, or have seen us covered in alerts, or whatever the case may be, is failure patterns, right? As we know from our technical rules up here, the break of a previous candle high or low should get continuation in either direction. When what should happen doesn't, we take that as a clue, right? So in this example, we have a definition of something called a failure to go higher, right? This is a broad term for us. This may sound confusing right now, but I want you to think of this like a couch. This is a broad term for us, right? Something that has reason to go high and attempts to go higher, yet fails, right? So you could identify a few different points of failing to go higher on this chart. First, you could identify right here, you could say, this candle, technically it failed to go higher. Why? Because we know that based on our rules, the break of a previous candle high or low should get continuation. Sorry, my screen just popped up a random window. Okay, there we go. Break of previous candle high or low should get continuation in either direction, right? So we see here that in theory, you could mark this as a failure to go higher, right? As something broke above a previous candle's high, right? And failed to go higher, right? So from a broad conceptual point, right? Anytime that we get action above the previous bar's high and we don't continue higher, in theory, right? There is a potential failure to go higher in place. Now, from what we know about the chart that we are seeing at the moment, let's just assume that there's a little pull here and then the bounce, break up here. We can assume that we are in an uptrend, right? So when something puts in a red bar here in an uptrend, are we looking to, from, again, you don't know all the 4 rules to our system yet. However, based on what you've learned about buy and sell setups, would you be looking to short after this red candle up here? Your questions will be answered, but I promise, give me some time to explain this one, right? No, we would not be looking to necessarily short up here. This is a counter trend move. So while this is failing to go higher, right, this isn't necessarily a failure entry that I would look at for a potential short or anything like that. What we would be looking for to happen in this potential uptrend based on what we know is just simply a pullback, right? This red bar here could just be the start of a pullback, and that is end up what we see happening on this chart, right? Is that it ends up pulling back and forming a buy setup here, right? So we're going to come back to this one later, but right now I just want us to broadly, okay, again, if you're confused, I promise I'm not done yet, right? Right? But this candle here, it fails to go higher in the sense that it breaks above a previous candle's high, and then the next bar takes out its low, right? Which starts a pullback for us. This isn't necessarily a short. This isn't necessarily something that is failing or anything like that, but it is technically based on our rules, right? Failing to go higher. Just conceptually understand that with me, right? Treat it like a couch. It will make sense in just a second, right? Now, on the flip side of that, we also have failure to go lowers, which will provide us with something in the other direction, right? Again, broadly, the description of this is something that has reason to go lower and attempts to go lower, yet fails, right? So on this particular chart, we can see in this box here, we have a layer of support, right? Again, we would be using an hourly chart to find our specific level, but here you can see that the market is continuously holding this area, this box, and we very clearly get a break and slam beneath that box, right? And a close beneath there. So in theory, based on what we know about basic price action, it would make sense if this were to try and continue lower, right? We just have support right there. We end up slamming through it. We get a weak close. Here, you could even argue that we kind of failed to go higher relative to right there, right? So we have reason and rationale to go lower, yet instead we stop, turn, pivot, and ultimately end up going back higher right here above this bar's high and get large follow through. So on this particular chart, let me get rid of these annotations. On that particular example, that was NVIDIA here on the weekly chart. And the reason that I highlight this, right, is to emphasize to you all how powerful these failures can be. In my opinion, the failure to go lower after breaking down this weekly structure, this weekly lower, the failure to go lower after that, in my opinion, caused this large move to the upside, right? It was a component as to why NVIDIA got such a strong follow through, was because it trapped a lot of shorts on this fake breakdown here, which presented a trade in the other direction. Right? So again, just broadly speaking here, conceptually, right? Understanding that NVIDIA had support there. And when we broke that support, we would expect NVIDIA, or it should continue to go lower. The same way that when something breaks pre-market lows, in theory, you would expect it to go lower. The same thing when you see something break the low of day, in theory, you would expect it to go lower. These are all examples of failure to go lower on a broader scale, right? Now, on a more specific scale, you can use failure to go higher and failure to go lowers to find entries for your trades as well, right? So let's take a look back at this chart, right? Here we see that something has reason to go higher, something has reason and attempts to go higher, yet fails. Now, when we say this has reason and attempts to go higher, why would we say that this chart here that we're seeing has reason and rationale to go higher, right? What would be, it's simply, it might be too confusing in a phrase question, but it's in an uptrend, right? Knowing what we have, right? Exactly. Trend up and pull back, right? From here, it's trending up. We can assume that once it starts to pull back, right, it eventually is going to form some sort of buy setup, right, and have an attempt to go higher. Here you can see this chart fits the definition of a buy setup, right? It is a move up. It is a move up that pulls back in an uptrend, right? Establishes a support, and a bar takes out the previous bar's high. By definition, this is a buy setup, right? And it's actually a decent looking one based on the context that we have in that chart. Right? Based on the context we have in this chart, on this chart, right? This looks like a solid buy setup, right? Now, what can we see ultimately ends up happening to this buy setup right there, and then ultimately right here? Here we see an example of a 3-word answer. I'm looking for a 3-word answer. Become sell setup. 3-bar play, neither of those are the right ones. Think simpler. Okay, the answer here is, right, we see an uptrend, a pullback, and right here we see that buy setup, right? So this action that ensues ends up showing us a failure to go higher or a failed buy setup, right? This is an example of a failed buy setup. Here you can see we had a buy setup in place. It triggers, it starts to work. You might have had some profit on this trade, maybe even trimmed as we got close to this previous swing high, right? But this buy setup ultimately fails, right? And we ultimately end up breaking back beneath another previous bar's low. But really the real thing that confirms it to be failing, right, is the break beneath here, right? A failed buy setup, invalidated buy setup, right? So like we mentioned earlier, we talked about conceptually how this was also a failure to go higher, right? And we said the failure to go higher broadly is like a couch, right? The reason I use that analogy, and there's probably a better one out there, but for whatever reason, this works in my head, right? Failure to go higher is a couch. It's a broad thing. You can have a whole different types of couches. You can have a recliner. You can have a single seater, right? You can have a love seat. These are different types of like sort of specific things that fit into this broader couch category that is a failure to go higher, right? So in this particular example, here we see a failed buy setup. In our analogy, let's consider this like a love seat, right? Here we see that there is a failed buy setup, and that failed buy setup actually shows has buy sells blah, blah, blah. The buy setup shows signs of failing, which give us a potential lower high here that actually does end up confirming into a lower high. Now, is this a sell setup right here? Don't know if I would jump that far ahead because we are still technically in an uptrend, right? So we don't want to call that a formalized sell setup. We know that sell setups come, right, within downtrends, right? However, there is a failed buy setup here, right? And again, the reason I use this couch love seat analogy is that a failed buy setup right here, right? And let me get these annotations off. A failed buy setup that ends up confirming by going like right here, right? Or triggering a potential failed buy, like an early entry short there, right? That love seat is always going to be a couch. It's always going to be a failure to go higher, right? Every love seat is a couch. It's what it is. By definition, a love seat is a couch, but not every couch is a love seat. For example, the failure to go higher that we identified from this bar, right, is not a failed buy setup. And it is not something that's necessarily actionable that we are going to be looking to be trading, right? However, you could have looked for a potential stab here, especially let's say, if there was a level right there and you were looking at that level as a rejection level, you thought that level was going to fail. You thought that the market was simply retesting that level, creating a lower high on a larger time frame before selling off, right? We have a rally into it, a pullback, another attempt at it, and then a potential lower high here. Even though it's slightly counter trend, there are times where I'd be okay with this potential entry. And this is the reason why I encourage you to all go back and rewatch all of the previous lesson fives, because there was one time where we did it. And this is exactly, I think it's Mastermind 5, I want to say. It's either 5 or 6. I think it's 5. Where it was exactly a setup like this, where it was a failed buy setup off of a level that presented an insane short entry that was a killer trade, right? And it all started with a failed buy setup that ended up offering an early entry short right here, right? And that was a failed buy setup that you could have used for a potential entry, right? Now, again, this failure here, this potential lower high gives us the same principles that we have in a sell setup or a buy setup. We have a signal bar, we have an entry bar, we have reason and rationale for this trade to consider like a counter trend, to consider taking this early. But the main thing that I want everybody to understand on failures, because it can be a confusing topic, right, is that this failed buy setup here, it's like a love seat, right? It is not every failure to go higher is going to include a specific exact trigger that you could potentially trade off of. Failure to go higher broadly is a concept, right? Now, this concept can be taken and applied to the downside as well, right? And provides failure to go lower, right? So a failure to go lower is something that has reason and attempts to go lower, yet fails, right? So failure moves often provide strong moves in the other direction, right? So here we see a chart moving down, it's moving down, it's moving down, right? We then see a rally within that downtrend, right? And here we see an example of a failed sell setup. Here we see an example of a failed sell setup, and that failed sell setup comes right here, right? And let me actually make that a little bit more specific. Because really where that failed sell setup comes is right there, right? We have a downtrend. We wait for something to rally and establish resistance in a bar to take out the previous bar's low, right? That is the definition of a sell setup for us from our sell setup slide, right? So here we see that a sell setup does trigger, right? This sell setup shows signs of failing. It triggers, then fails. Right here, you see a rally up in resistance, a bar that then takes out the previous bar's lows and triggers that sell setup, which then ultimately fails, which provides a trade in the other direction. Right now, I'm not saying too long every time you get a failed buy or a failed sell setup. I'm not saying that. But when you are identifying charts and looking at how you can identify trend changing areas, usually it will come with a failed buy or sell setup or a failure of a certain area, right? You will have some sort of clue that you can take to apply that, right? Now, the reason that I wanted to include this little note here, right, is that here we technically have a failure to go higher on that broad couch level that we were talking about, right? Because here we have a green bar that closes green strong above several previous candles, and the next bar breaks above its high in that rectangle there. From a broad perspective, we failed to go higher, right? We failed to just continue there. Now, is that surprising to us? No, we were in a downtrend. We were looking for a sell setup to trigger at some point within that downtrend anyways. Then we just go from there. After the sell setup triggers, we can watch to see if it gets follow through or if it fails, right? In this particular example, the sell setup triggers ultimately failing to go lower. So here we can see that this failed sell setup did provide a trade in the other direction. Now, you might be asking, Jake, when would I use this versus when would I use a buy or sell? I promise it'll all make sense once we, in just a short few while. But right now, I want everybody to be on the same page that is the broad idea of failure to go higher and failure to go lower. And that's like a couch, baby. Whole lot of different subsets within there, right? And one of the ones that we specifically focus on and pay attention to, and I shouldn't have said a whole lot of subsets because that already makes people think that there's more, and in reality, there's not that many. But one of the ones we pay attention to is failed buy or sell setups, right? Which is like a love seat. Every failed buy or sell setup is also a failure to go higher or failure to go lower, whichever one it applies to. But not all of them have fail or buy sell setups, right? It's like that same analogy that you'll hear, like, all NBA players are athletes, but not all athletes are NBA players, right? It's one of those similar analogies, right? You could use it in all Netflix shows are television shows, but not all television shows are Netflix shows, right? It's one of those broader categories that what something fits into, right? So here you can see another example of a sell setup, right? So here again, something that has reason, attempts to go lower and fails. Here, right here, we actually get a daily sell setup trigger, right? And this was a daily chart, I believe. But here we can see, right? Okay, this is my bad. I was supposed to. I was supposed to go 1, 2 from 1 into 2, right? So we ask ourselves the question, right? Why did we stop and reverse here? Why did this sell setup fail, right? We can see that this particular chart, if we zoomed out, right, that failed sell setup that we were just seeing, that failed sell setup that we saw right here. Damn, I botched this, guys, because this was supposed to be a much smoother transition. But this failed sell setup that we see right here is actually taking place inside of a larger failure to go lower, right? We talked about how here a break under support, right? We should have continued lower. And when we didn't, that provided a large move in the other direction. Here you can see that we do trigger a daily or a sell setup. It is a daily chart. We do trigger a sell setup here, but this is after a larger picture failure to go lower. Here we failed to go lower after breaking under the support. Right? We broke under the support. We started to move down, but we really didn't make any downward progress. And after we ended up triggering a sell setup and then failing, we end up getting this breakout, which does indeed flip the trend from downtrend to uptrend, right? So in my opinion, it was this failure here that ended up providing the cause for that ultimate trend flip back to the upside, right? And you could have argued that it was right here. You could say, oh, Jake, what about right here? Right? This kind of fails to go lower. Yeah, that's true. But then we trigger a daily sell setup and it keeps going down. Here we failed to go lower. We trigger the sell setup and the sell setup doesn't get follow through. That to us, from a trend perspective, puts it back on track to be getting back into, or flipping back into an uptrend from a downtrend, right? So again, here you can see, right? We have a love seat. We have a failed sell setup. We have a failed sell setup that occurs right here. Right here, we have a sell setup. It triggers. And then as soon as we get back above this rectangle, this bar here, it's confirmed that sell setup has failed, right? That's a love seat, a failed sell setup. Then from a broader perspective, we can see that that failed sell setup occurred after we had failed to go lower underneath this support right here. That was a terrible circle, but you see exactly what I'm pointing at, right? That would be an example of our couch, larger, broader concept, failure to go lower. The reason I spent so much time on that tonight is because it's really important. Like, failures are a big part. And I'm sure that you all have seen that since you learned about buy and sell setups, right? Because this is the way the market moves. The market moves in a series of market moves from level to level. But how it does that is a series of trends with pullbacks that hold And when those pullbacks don't hold or that, it's because we have a failure on some sort of level, right? The trend failed in some way, shape, or form. So I'm sure over the course of the last 2 weeks or weeks since you've learned buy and sell setups that you have also seen failure patterns start to play out, whether you knew what you were looking at or not, right? So this might be a little bit of the missing piece of the puzzle. And if you're not clear on what they are yet, don't worry, we're going to talk about them more. This is failures are an ongoing thing. It is something that, again, it's a concept, but it also has specific going on. So don't freak out if it's not like, if you understood buy and sell setups more clearly than failures, that makes sense to me, right? Buy and sell setups are easier to define than a failure is. BRB, I got to turn my light on. I'm back. I turned my light on. Right. So we do. It's some people might feel like, Jake, I understood this the first time you said it. Some people might feel like, Jake, I need to go through this particular lesson another 10 times. I understand why people would be in both camps, right? This failure concept can be difficult. I promise, though, once it clicks, it will click. It's all like similar with all of our stuff is that once it clicks, it truly does click, right? Now that we have covered that, right? Let's move into the main vehicle of the evening, the main thing on our agenda, which is multi-time frame analysis. I know that this is an extremely important topic. For a reason, you all have the access to the previous other 5 masterminds of this particular lesson. This is probably the most important pillar of what we do, which sounds weird because you would think that it's the levels, right? Or you would think that it's the buy and sell setups and those one candle stops and all that, right? But in reality, the main and biggest, most important thing of what we do is multiple time frame analysis. If the time frames aren't aligned, if the time frames aren't painting a clear picture for you, if the time frames aren't telling you something, if you can't create a thesis based off the various time frames, then the trade isn't there, right? So this is extremely important, and in my opinion, it's taught by most educators, but taught the wrong way, much like many of the other subjects that are taught, right? Now, most of you, I imagine, are familiar. Again, I say most, not referencing the people who are the newer traders in our group, right? But most of you, I imagine, if any of you have put it in the chat, if you have ever been taught top-down analysis, right, where they say look from the top down, or like a pyramid, some people teach it, right? We start on the longer time frames and then you dive into the smaller time frames. You start on the weekly, then you drill down into the 5-minute and all that, right? That is how most people teach it, right? And I don't necessarily disagree with them I mean, I kind of do, but it's not, to me, the way that it's taught right now is that like you should start on the daily chart and do your analysis. And then once you do that, you're done with the daily chart. Then you do your analysis on the hourly chart. Then you're done with the hourly chart. Then you do your analysis on the 15-minute. Then you're done. And I don't like that. You'll notice that during our very first lesson, one of the first things I showed you all is how to get your think or swim screen the same as mine. And on my main screen, I'm always watching 5 time frames of the same individual name, right? The reason for that is that these time frames impact each other, right? They impact each other. It isn't just something where you can just be like, oh, the daily is doing XXX. Okay, now I'm done with it, right? It's like, no, the daily is doing something. The weekly is doing something. Now, what are these other ones doing which impact that decision, right? So I like to compare it to a road trip analogy. We started out with a weird analogy back in the day, and then Ron G, I haven't given them a shout out yet, but Ron G and Joel are on with questions tonight, and I know just in my soul, J-Bab is as well. But for us, sorry, one second. I got a message here that I want to make sure isn't an emergency. J Groove is fired. Okay. All right. So this is the only the road trip analogy that I personally love to use, because I think it clears up sort of this. It's a good way to describe what we're looking at, right? So the analogy that I like to use is, let's imagine that you are going on a road trip, right? Let's imagine that you live in New York, right? You live in New York. I live here, California. You want to smoke a joint with me. I want to smoke a joint with you. But in order to get here, you're going to have to take this long-ass road trip from New York to California, right? That's a long ass road trip. That's a big, broad trip. It's unlikely that you're going to be able to get there in one tank of gas, right? It's unlikely that you're going to be able to get there without stopping for a piss. It's unlikely you're going to be able to get there without picking up weed in Colorado along the way, right? But that large time frame, that large trip, that broad from A to B, New York to California, that's your weekly chart, right? That is the biggest time frame that I pay attention to mostly. I will rarely look at the monthly charts, but most of the time, to be honest, I don't. I just don't think there's those can provide huge moves, but then it's hard to drill down into smaller time frames from there. If you're a swing trader mainly using you want to swing trade for months out expirations, then I would take a look at the monthly chart as well. But for me, I always look at the weekly chart first. That's the priority, right? However, your trip from New York to California, right? As opposed to top-down analysis, which you would identify that that's your trip, right? Your large one, and then stop caring about it and go into the small time. For us, we need to figure out, right, the pieces that are along your way that are going to affect that trip, right? You're going to have a trip in there from New York to Colorado, let's call it. That's going to be a big chunk of the trip, right? Because you got to stop in Colorado and pick up my joints, right? If you're going to come here, smoke a joint with me, you better come correct, right? You got to bring the good stuff, right? So you got to stop in a state where it's fully legal. You can get some fire. You stop in Colorado, right? That drive from New York to Colorado, that's going to be your daily chart, right? It's less than the overall broader trip from New York to California, but New York to Colorado is no joke, man. That's still a drive. That's still a drive, and you are definitely going to be putting in some miles on there and paying attention to that long distance, right? Now you get to Colorado, you get there, you get your joints, my joints, you pick them up, they're fire, right? Maybe you smoke a few as a tester, all good, right? Then from Colorado, you drive, and next you run into Arizona, and you stop by because you got to pick up Mullet, who lives in Arizona. Mullet lives in Arizona. You got to pick up Mullet along the way, as well as fill up for gas, right? That road from Colorado to Arizona is significantly shorter, right? It's significantly shorter, and that for us will act as, let's say, our hourly time frame, right? However, it's really important, right? The importance of that trip from Colorado to Arizona is no less important than the one from New York to Colorado, right? Because if you don't get gas in Arizona, that means you can't come bring me my joints. If you don't pick up Mullet along the way, that means I'm going to kick you out, right? So that trip in and of itself, just because it's smaller, it's still very significant to us, and it can affect our larger trip as a whole. Let's say that you get a flat tire on the way to pick up Mullet in Arizona, right? Let's say you get a flat tire along the way. That flat tire on that segment of the trip is going to affect your overall trip as a whole. You're going to be delayed in bringing me my joints, which, first of all, is disgraceful. But you're going to be delayed in bringing me my joints, right? And because all of a sudden you had a hiccup on the Colorado to Arizona portion, your broad trip, your weekly chart is going to be affected. And it all started because you blew a tire on your hourly chart when you're driving from Colorado to Arizona. Then you get to Arizona. From there, we're getting close, right? You get from Arizona to Northern California. That's your 15-minute chart, right? You get to Northern California, you are so close, right? And finally, you get down into LA to bring me my joints. That's your 5-minute chart. LA is a big place, however, to drill down into Santa Monica, which is specifically where I live. From LA, please don't murder me. You have to go then down into your 2-minute chart, right? Now, the important thing about this is, one, to understand, right, the broad analogy, but understand that each segment of the trip impacts the other, right? That's where I believe top-down analysis is taught wrong, is because it's taught in the sense of, it's like, do your 4-hour analysis and then forget about it, or do your daily chart analysis and then forget about it. And it's like, well, no, what if your daily chart, or if your weekly chart, excuse me, is New York to California, if one of your legs of that trip, aka your hourly chart, gets fucked up, that's going to impact your weekly chart, right? These play a role in impact, in work with and against each other, right? So with that being said, there are some specific things that I pay attention to for using each time frame. I always look how the time frame is impacting each other. However, right, I look at how they're impacting each other. However, there are specific things that I look to use from each time frame, right? So the weekly chart is always our priority, especially with swing trades, but I don't care if you're a scalper. I don't care if you're a swing trader. I don't care if you're a day trader like me, longer intraday holds. I don't care. The weekly chart is always your first priority. If you're scalping against the weekly chart, your scalps are going to be harder. If you're scalping with the weekly chart, your scalps are going to be easier. Like the longer time frames always make things better, right? It always does, right? Then we have our daily chart, which for me is bread and butter for individual analysis. I love looking at a daily chart and asking myself the question, what do I reasonably and rationally think comes next from a candle perspective, right? And I love doing that on the daily chart. I love it for trend analysis and for buy and sell setups, for daily buys and sells for swing trades. The hourly is our key to it all. It's amazing for where we find our levels. It is amazing for trend analysis as well. The hourly chart is, we love the hourly chart. The 15-minute chart for me, I consider like the 5-minute plus. It's pretty similar to the 5-minute, but it just has more data, right? I love the 15-minute chart for intraday buys and sells. If you are trading after 8 a.m. Pacific, first 90 minutes of the day, I prefer to shift to 15-minute charts for buy and sell setups because they have less fake outs. Their trends are usually more developed, and I love it for that. Right? The 5-minute chart is what I will use as my main management time frame. That's the one that I'm primarily watching and managing a trade based off of. And the 2-minute chart is what I will use for early analysis on entry and exit. Right? So that is how I will use all of the different time frames. However, all of these different time frames are synced up with each other. Right? And this is where, in my opinion, educators get it wrong. Right? The larger time frames always reign supreme. However, all time frames impact each other. For example, let's envision something is in a weekly uptrend, right? So let's go over here and look at NVIDIA and look at right here, right? Here, I wish, I don't know how to clear this drawing set as much as I do on TradingView. Let me just do it. I know that people are killing me because there's probably an easy way, and I'm going through the hard way and clicking, but let me get some of these lines off. Okay, so first, here, I don't think there's any debate, right, that at this point in time, at this oval, and really let's call it this box right here. At this box up here, what is the trend that NVIDIA is in on the weekly time frame here, right? Very clearly an uptrend. Not rocket science, right? Very, very clearly an uptrend, right? Now, this is on a weekly chart, right? So let's see. On NVIDIA's pullback, before it triggers the weekly buy, which is right here, right? The weekly buy gets triggered right there. It doesn't get triggered before that. We have 1, 2, 3, 4, 5. 5 weeks of pulling back prior to that buy setup that triggers. Now, during this box right here, what kind of trend do we have? We just triggered a buy setup, right? So that would make us in an uptrend, 100%, right? That would put us in an uptrend. This chart from here, to here maintains an uptrend the entire time. From point A to point B, this maintains an uptrend the entire time. However, there are 5 weeks of pullback. Really 6, because the buy triggers here. 6 weeks of pullback. In each individual trading week, there are how many daily candles? How many daily bars are in a trading week? 5, right? So that means that for this weekly uptrend to get a pullback, right, within this 6-bar pullback on a weekly uptrend, there were 30 daily candles. 30. That's a lot. It's easy. We just talked about how from point A to point B here, we held the uptrend this entire time. NVIDIA held its uptrend. NVIDIA just ended up, it was just a pullback, right? It was just a pullback, right? However, during that time, right, it became, do we think it's likely that the daily chart held an uptrend for 30 candles? right? Or within this 30 candles, what would have needed to happen, right? The daily chart would a pullback on the weekly, right? A pullback on the weekly, which we just identified here on NVIDIA, would likely require the daily chart to shift into a downtrend, right? So if we look here on this box on NVIDIA on the weekly, and then we flip to the daily chart, which is right here, this does flip to a downtrend at some point. You got a PHL there, PLH, excuse me, that ends up getting continuation. Here, it's weird and funky because they're green. However, they are still potential lower highs. We have this sort of support area that we've broken beneath. Then we rally up and form a potential lower high. We sell off. We get a new lower low, right? Now, I would argue, and you could make the case that broadly speaking on this daily chart, this was simply a higher low right here, right? But that is actually exactly the weekly chart, right? That is the higher low. That's this box and this box. That's the weekly chart pulling back and getting that higher low, right? So in order for the weekly chart to get this pullback, the daily had to shift into a downtrend, right? The daily had to shift into a downtrend in order for that weekly chart to pull back, right? So this continues to happen as you drill into smaller frames. A pullback on the daily chart would require an hourly chart to shift into a downtrend. Why? Because there are 7 hourly candles for every 1 daily chart. If an hourly trend is going to get a pullback, whether it's up or down, if there's 12 hourly bars in a daily candle, it's unlikely that those candles are going to hold that trend for so long, right? Essentially that would be going sideways, really. It wouldn't even be much of a pullback, right? In order for these larger frames to get pullbacks, these smaller time frames have to shift trend, right? And this works as you drill down into smaller time frames, right? So a pullback on the weekly would require the daily chart to shift trend. A pullback on the daily chart would require the hourly chart to shift trend. A pullback on the hourly chart would then require the 5-minute to shift into a downtrend, and so on and so forth. And the same thing works, right? And when I say pullback, I'm not only pullbacks reference both up and down trends. Pullback just means like a reversion from the trend, whether it's going up and it pulls back, whether it's going down and it pulls back. Pullback is just a reversion concept, right? Just for any clarification of that. Because right now you could be, this ones are all I actually want to take the word downtrend out of all of these. I want them just to be trend. Shift in trend. Right? So the larger time frames will always reign supreme. However, all time frames are always impactive of each other, right? So a daily flipping into a downtrend, a pullback on the hourly would require the 5 or 15-minute charts to flip into an uptrend, right? These time frames are going to be working in conjunction with each other, right? So, all right, while we're at the hour mark there, we're right where we're at, let's pause. We're going to take a step back. Everyone's going to go pee, get some water, and I'll BRB. All right? All right, everybody, BRB. All right, everybody, welcome back. Let me share screen really quickly. All righty. So as a reminder, right, we just finished up talking about how time frames for us are going to be impactful of each other. And now I want to cover a few different examples of that real time in the charts to identify what were the trends, what were the levels, what were we paying attention to, and look at that as an example. Now, this is the part of the lesson where for each different class, we look at a different chart, right? I do believe that some of the examples from a previous lesson might be a little bit like cleaner examples. There was one we had, I think it was Mastermind 4, where we covered snow, that chart, and it was a great. Let me get this up here. We covered the snow chart, and it was a great lesson. And then there was one with the ES where I talked about that failed buy setup, and it was another great example. Tonight, the time frames are pretty conflicting overall, right, in the market, and I think that's why this week has been one of the trickier weeks as a whole, right, is because we sort of have had a battle of the time frames, right? So let me go ahead and pause share there. Let me load this new screen. Let me share screen. All right. So again, bear with me on questions here. We have Ron G and Joel on who should be able to help handle any questions that pop up. Bear with me. Give them a chance to answer once they're popped up. And try not to get too distracting in the chat if it's wild and out in there, right? So that we can remain focused, right? But that being said, I wanted to go through first and mark out on the ES, right? Make sure I wanted to mark out on the ES sort of what was in play for the day, what I was watching to happen, right, from our multi-time frame analysis, and ultimately what did end up happening in the market, right? So first things first, as always, we start with our weekly chart, right? So I'm going to do a new drawing set. Right? And on our weekly chart, at the moment, we kind of have a little bit of a mixed trend, right? Here we have a potential higher low. And I'm still calling this a potential higher low because while we did indeed break above that high, we didn't really get any continuation, right? We haven't really gotten any follow through over that yet. So I don't want to call this like a confirmed structural lower high because we haven't gotten any follow through over the previous swing high yet, right? That being said, at the moment, what we were looking at on this particular week here was a potential higher low. Right? And we were looking at a weekly buy setup, right? The trend isn't the cleanest here on the overall market, but we were looking at a potential higher low on the weekly chart and a weekly buy set trigger, right? Uptrend, move up here, pull back, and a break above a previous buyer's high, especially after coming after a hammer, right? So the weekly chart for us, for me at least, is why I was looking primarily longs today, is because I thought that the weekly was going to take hold and that this weekly buy would ultimately end up taking precedent over any smaller time frame contradictions to our chart, right? Now, as we can see, that weekly is showing us we have a weekly buy setup in place, right? Then we drill down into the daily chart, right? The daily chart is actually a little bit more mixed. The daily chart, in terms of a trend, I would actually call the daily chart more in a downtrend than in an uptrend, right? Here we had failed to hold under this previous, it's kind of a range. We get this pullback here. It's a tricky trend changing area, right? However, this looks like a rally, but let me actually say this. Coming into today, if you were to put a PHL here, would that logically make sense, right? Ignoring today's candle, ignoring today's sell action, right? Would it logically make sense for this to be a potential lower high given the action that we're looking at, right? I would say yes. You agree? Yeah. I think we're all sort of on the same page there, right? Is that this would act as could act as a potential lower high beneath that bar's low, which means that a daily sell setup would be in place, right? So at the moment, coming into today, we have the weekly buy setup in place. We have a daily sell setup in place. So already, in my opinion, this is a good example as to why nothing today was A++, because the time frames were contradicting to each other, right? While I do think there was opportunities to make trades, and while we did have some good ones and some not so good ones, right? The time frames here were conflicting to each other. Right now, I thought that we could potentially use that to our advantage, right? But it ultimately ended up working out in my disadvantages. I thought the market would hold, right? I thought, and we'll drill down as into why, but I was looking for that weekly buy setup to hold. We all just pointed out and identified why and a valid reason for a weekly buy setup, but we also identified a reason for a potential daily sell setup, which means that we're in a trend changing, tricky area, right? And for us, it really came down to the levels and how our levels reacted, right? So after looking at the weekly and the daily chart, then I now will drill down into the hourly chart, right? Which the hourly starting today, I would say that above our level, which was right here, right? Oh, I need to turn on open, high, low, close. Hopefully everybody is able to understand why we had a level right here at 40, 20, 25, right? But with that level in place, right, that was our hourly high or low at the moment, right? And again, you could, some people will be like, Jake, can you have a higher low off of just one candle and all that? For us, we had nothing else in the area, right? So that was our level and our reference point, because it was the only level we had until down all the way down here. So yes, I would have considered this a higher low on the hourly time frame, even though it only looks like a 1 bar pivot there. It was the level that we had in reference point, right? So what I was personally looking at, right, is that we have, where's that? No. We have the weekly buy setup in place. We have the daily sell setup in place. And we have an hourly level, right, below. So here we see, again, the hourly chart is in an uptrend at the moment, and it has a level to pull back to, this 4020.25, right? Now, in theory, if this level holds and we start to reverse and go up, what would that do to our daily sell? If we were to have held here and started to reverse higher, what would that have done to our daily sell setup? Failed, invalidate, failed. Yep, exactly, right? In theory, if we had held this level and reversed up, right, the daily chart would look more like a hammer here, and we would have had signs of failing that sell setup, right? Which in my eyes is what I was personally looking for. I was looking for us to fail that daily sell setup. Why? Because I thought that the weekly buy was going to win that battle, right? This is an example of, and I'm actually glad that this is the example that we're covering tonight, because in the previous examples of multi-time frame analysis, we haven't done a deep dive, to my knowledge, on conflicting time frames on daily and weeklies. And today was a really good example of a battle between the daily and the weekly chart. I thought the weekly was going to win, and ultimately that daily sell ended up winning, right? And here's how we can sort of gauge how that daily sell won and how we could have used that to a trade. right? So we know on the hourly chart that we're in an uptrend with a level to pull back to, right? So if we now then drill down into a smaller time frame like the 5-minute, right? We are opening up weak on the day, right? And this pullback into this level would ultimately have continued on the downtrend that we started late yesterday. Here we failed to go higher. We end up creating a downtrend, new lows, lower highs, new lows, right? And we see that from an intraday perspective, we continue to hold that downtrend, right? So where'd my LaCroix go? What the hell? There we go. Right, so on this pullback into the level, intraday, I'm going to mark the fourth one as intraday. Right, coming into the morning, we have an intraday downtrend. So all of the information that we have in place in the morning leads us to believe, in my opinion, that a pullback to 40.25 was likely, right? And you can see in the 40.20.25 in the pre-market plan, one of the things that I noted, right, was that I was interested in shorting a failure to go higher, right, down into this level. The reason I was interested in shorting it in the level, right, is even if the daily sell failed, right, even if the weekly buy took hold, I thought that it would come first with a test of that level, right? So shorts into the level were super valid. I'm bummed because I did take a little bit of short, but I ended up also taking DKS long, which was a great trade. It just, I didn't hold it well. I was at both DKS and SPY. DKS ended up getting more follow through later. It was just bad timing on my part. But I was able to capture a little bit of this move into, and it was on the ES, into 40.20.25s, right? Now, once this level started to trade from there, for me, the game plan was to look, right, for the daily sell to fail and for that weekly buy to ultimately hold and take place, right? Meaning that the hourly would hold this level and the smaller time frames would develop an uptrend. Right. So for me, this is what I was seeing overall. And my long thesis today was based on that weekly buy, looking for that to get follow through. Right. I was looking for the daily to fail that sell. I was looking for the hourly chart to hold this level. And I was looking for a small time frame to shift and trend in our favor for a long entry, or as we discussed earlier, some sort of failed sell setup off of the level to potentially take a trade. Now, I'm going to pause and stop share here for 1 second, just because earlier on tonight, we talked about how, right? We talked about how right here, right, is a failed sell setup, a failed buy setup, excuse me. And we were like, is there times that we would take that trade, even though it's technically not in confirmed with our trend yet? And there would be, I said, if there was a level there, right? For us today on ES, I was willing to take a potential higher low before we had confirmed an uptrend because we had a level there. And I used a failure pattern for the entry method of that trade, right? You can think of it as well as an example right here. A failed sell setup is technically still an early entry, right? Because you're not trading with the trend. However, it can be, I'm okay with you taking that, like a failed sell setup as a long or a failed buy setup as a short, if you have a level there as a reference point, right? So for us today, we quite literally had, we quite literally had this level in place, right? where the smaller time frames here had failed to go lower and gotten back over the level. And on a 2-minute chart, it's even a little bit more clear, right? Where here we set a sell setup and it fails to get that follow through and continuation, and then ultimately ends up getting the rally back. So that was where I got the first long trade of the day, right? And that, to me, I would do that 100 out of 100 times again, right? Now, where I made a flaw in the day, I believe, right, was I really thought that the market was going to hold this level on a pullback, set another potential higher low here, and then eventually shift this trend, right? But in reality, this action right here, right, on a larger time frame like the 15-minute, was just a sell setup developing, right? So if you ask the question, why did the 2-minute chart rally and flip into an uptrend, right? In my opinion, it was because the 15-minute was extended and needed to develop a rally within its downtrend, right? It needed to establish a 15-minute sell setup, right? But in order for this 15-minute chart, right, and I'm going to mark it right there, hopefully that we can all see right there, right? All see meaning $15-minute sell setup, downtrend, rallies, establishes resistance, bar takes out previous bars. Right, so here we have a 15-minute sell setup that triggers beneath the level, right? In order, this is where multi-time frame analysis comes into play. And this is where your understanding of multi-time frame analysis, I think, can really, really be key, right? In order for this 15-minute chart to get the rally, what happened to 2-minute? Right, so in order for this 15-minute to get the rally, and when I say rally, I mean this move that we caught along, right, back to like 40-40. In order for that 15-minute chart to get that rally, what happened to the 2-minute chart? What was the 2-minute chart's trend? What was it doing? On this rally, aka this area right here, this wick right here. Exactly. The 2-minute had shifted into an uptrend, right? The 2-minute here set a potential lower high, took it out, set another potential lower high, took it out, right? So the 2-minute trend was higher, right? The 2-minute trend was going up, and that 2-minute trend is what the 15-minute needed to get a pullback, right? And for the rest of the day, you can see that the 15-minute chart actually maintains a pretty clean downtrend. Here it does kind of briefly spike above this area, right? But ultimately ends up holding a pretty clear downtrend, right? Now, what is cool, right, is let's pull this to the side. Let's pull this to the side. Let's pull this to the side. Let's flip to the hourly chart here, right? The hourly chart gets a close beneath the level, which we refer to as confirmation closes beneath the level, right? So it confirms to us, right, that the level is invalidated for now. And that would be sort of the opening eye to potentially more short trades. And this is where I have regrets on the day, right? While this next bar does ultimately end up trying to rally, right, and it acts as a pause bar, it actually ends up creating a new level for us right here, right? Which the same way this right here acted as a potential higher low, this acts as a potential lower high, right? In order for this hourly chart to get that move, right, right? In order for the hourly chart to get this rally, this green bar, what happened on the 5-minute? The 5-minute actually attempted to shift trend back over the level, right? This is where I kind of got caught because I thought getting back over the level to look for longs on this risk reward. And that was a mistake, right? Because while the 5-minute chart had flipped trend, right? On the hourly chart, it was simply a pullback. It was simply setting up for an hourly lower high, right? Which ended up holding under the level and reacting down there, right? But it's really cool for me to see how in order for this hourly chart to do that, right, it needed to get the smaller time frame shift in trend, right? Where the 5-minute at one point tried at least to shift into an uptrend. The 2-minute did shift into an uptrend down here. Again, right? The 2-minute had shifted into an uptrend, trying to hold. And again, if these smaller time frames had held their uptrends, then eventually the longer time frames would have flipped as well, right? But I thought it ends up being a very cool example to see the price action around that 40.25 and sort of see the conflicting trends. Now, I want to pull up another chart as well to look at, right? And do this one on DKS, right? So coming into the day, DKS has a weekly chart that is in an uptrend, but it's kind of consolidating, right? But I would say that it is in an uptrend. Here, what would I call this oval an example of? What would this oval be an example of? Failure to go lower, failed sell setup. I see some failed sell setup. Yep. I don't know if I would call that a failed sell setup. Probably mixed, because you could say that as acting as a lower high, but I would for sure call this a failure to go lower, right? We had an inside bar there. We had reason and rationale to go lower. That is the couch broad definition of a failure to go lower. We break beneath these previous bars low. We have reason and rationale to go lower, yet we don't. Right here triggers the buy setup, right? Important distinction, right? Right there triggers the buy setup. Right here is where we see those clues of a failure to go lower, right? I don't want to call it a failed sell setup. I don't want to call it a love seat, right? Because in order for me to call this a love seat, which would be a failed sell setup, we would need to be in a clean downtrend. And I wouldn't necessarily call this action up here a clean downtrend, right? So I'm not going to call this a love seat. I'm not going to call this a failed sell setup, right? But I am going to call that, right, a couch, which would be a failure to go lower broadly, which ends up triggering the buy on DKS. So DKS's weekly is a buy setup, right? We then drill down into the daily. And while the daily isn't like, I don't know, it's not by definition a buy setup or anything. The daily is gap over red, which we'll talk about. Don't worry, that's lesson 8. Right? The daily here is gapping up over a previous bar, and it's breaking out of this range that it has been in. Right? Both of those things are overtly bullish traits. Right? Then we start drilling down into the hourly time frame. DKS was slated to open up here above this previous range and in an uptrend, right? So if you scroll back, I believe the level and there was a little zone. right? We had DKS and it was gapping over this 139.37 level, which we like, right? It was gapping over an hourly level, right? Then we drill down into the 5-minute time frames. We drill down into a 5-minute time frames. Right? And in the 5-minute, we have a clear uptrend. Right? So DKS is a very high quality setup this morning. Now, the problem with it for me, and the reason that I didn't, because I wish I had alerted and looked to take a potential trade off of this level down here, right? The reason for me that this wasn't A++ or wasn't something that I was trying to buy at the open was because of the overall market, right? I was looking for the overall market to sell off 30 points down into this level. So I thought DKS, if it could prove its strength, I was open to longing it, which is what we did, right? But I didn't want to buy the open because I didn't want to get caught if this would just slam down with the market overall, right? But here we can see pretty clearly, right, that all of our time frames are aligning here and that this is looking relatively bullish, right? Now DKS ends up getting this push up, right? And it starts to develop a clean trend. Even though this wicks beneath real quick, it still ends up acting as a higher low right there. It fails to go lower. Right, so you could, I'm gonna make a note there. You could call this a failed lower low, right? I'm just gonna call it a high low because it ends up acting as a higher low right there. Could call it a failed lower low, right? It fails to go lower, right? And we have a higher high, higher low. Here another couple of potential high lows, right? So we'll just mark it there. Right, a high high. But eventually, you can see DKS here shifts trend, right? We have a higher low, and we fail that higher low during this rectangle right here, right? We break beneath it, and the 5-minute trend then shifts, right? The 5-minute trend shifts here and starts getting a large point. But on a, that's 2-minute chart, excuse me. But even regardless, still on a 5-minute chart, it shows the same thing, right? We have a higher low in place that ends up failing, and the 5-minute trend here has shifted. We make a lower low. We make a lower high, right? So you can see the 5-minute shifts to a downtrend, right? Now, if we ask ourselves, why did that 5-minute shift into a downtrend? If DKS was so strong and it was going to close damn near at the high of day no matter what, why did it shift into a downtrend, right? Why did it shift into an intraday downtrend? Just an hourly pullback, bro. Hourly chart looks like it just needed a pullback. Hourly chart was pretty damn extended, got a little 1-bar pullback and back to the highs. In no way, shape, or form does that damage that pullback on a smaller time frame. Did it damage the longer time frame trend? It was just that the larger time frame, like an hourly chart, needed a pullback. In order for this hourly chart to get a pullback, how many 5-minute candles are in an hourly bar? 12. 12 5-minute candles. If the hourly chart is getting a pullback, that means that the 5-minute chart would likely end up shifting in trend. Right? Now let's look at another example of this on Tesla. Tesla coming into the day had 2 levels that I was primarily watching. In this one, I am bummed that I missed the short. I caught SPY, which is why I didn't take Tesla. But Tesla was very clean, right? First, we have the weekly chart, which I think it's kind of up for debate whether you call this an up or a downtrend. I'm just going to make a note here because I think you could argue and you could have a debate, did Tesla, is this the lower high, right? So is it technically in an uptrend now? Is this the lower high? Or is that a failed high? Is this an uptrend? I don't know. But I think one thing that we all could agree upon, regardless of that debate, is that the weekly chart has room for a pullback, right? The weekly chart has moved like straight up, gone almost 100% up from these lows here, right? This structure could have room to pull back because anywhere within here would be some sort of logical area for a higher low, right? So the weekly chart, we agree, has room to pull back, right? The daily chart had just recently flipped into a downtrend, right? We have a lower low here. And we have a potential lower high right there, as well as a daily sell setup, right? So the weekly chart is telling us that there's room to pull back. The daily chart is telling us that we had just flipped into a downtrend, right? Now the hourly chart, we have a level here at 196.81, kind of sneaky. I guess this one was still in play too, actually, now that I look at it. 193.35 from right here and 191.86 from right here. Both still technically in play, right? But the hourly was slated to open up underneath support. Right, so the weekly had room to pull back. The daily had just flipped into a downtrend. The hourly was in a downtrend, right? Just had a lower high there, or potential lower high, and was opening up underneath a level, which we like, right? Because we could look for a retest of that level, right? Early on in the morning, Tesla has the retest of that level, fails to go higher. The 5-minute chart here, right? Retests the level, fails that level, and then triggers a sell setup. Right? Knowing that we have targets down beneath at 188.59 right there. Right? This was a wild intraday move from Tesla too. To get new highs on that shit was nuts. But Tesla's pulled back, right? All the way down here. And so this would be an example on this trade from this level to this level would have been a high quality setup, in my opinion, a very high quality one. I'm bummed I didn't catch it. But this was time frames. Right? There was time frames aligning, AKA time frame confluence, right? Meaning that these time frames were in sync with each other. Not only had we done our top-down analysis and identified what we thought about each of the time frames, but we were paying attention to how they impacted each other. Why did this 5-minute chart get a little wick up here and try and push up and hold? Why did the 5-minute chart do that? In my opinion, so that the hourly could get a little wick and retest of the level. Right? These time frames are not random. They are working in sync with one another. right? So now what I want to do here is I want to pause this share and do a little reshare action. Because we are coming to a point that I'm very excited about in this class, which is the tying it all together phase. As of now, my friends, you officially know the strategic system that I use to day trade the markets. Now, there might be minutia that you need clarified. Yes, we're going to go into how to build a watch list. We're going to go into more specific details. However, everything that I'm about to mention to you now should, oh, it's so sexy. I swear, I meant it when I said everything tied together. All of these 4 rules that I'm about to reference to you should sync up with a previous lesson, whether it's tonight or any of the last 2, and you should have a clear understanding of what they mean, right? So let's stop share. I'm going to go back to my Thinkorswim screen. Don't worry, of course, we'll get the, we'll put these rules right back up. Share screen. Because this is what helps us make it easy, right? Not easy, but this is what helps make our system, in my opinion, easier than most, is that we have defined rules that we look for prior to entering a trade. Rule number 1, use a level or the opening print as a reference point, right? For us, on all of our trades, or 99% of them, we like to have either the opening print or an hourly level as our reference point, right? Why? Like I said earlier, I hope that all of you are able to understand why for each of these 4 rules. Why? Because markets move from level to level. Wait for a level on your trade and watch your win rate go, woo, right? Whether win rate or your profit factor, right? Because markets move from level to level, and we've seen the power of them, right? So first of our rules that we want to look for when entering a trade is using a level as a reference point. Let's say we took this short on Tesla today, 191.86. Boom. We have a level as our reference point. That checks the first of our list. Second rule on our list. With trend. The majority of our trades, not all, because sometimes I don't mind sometimes counter trend, small size risk, but even when I'm using counter trend trades, most of the time, it's because I'm trading with trend on the larger time frames. For example, today, you could argue that I took SPY, even though the 2-minute and 5-minute had shifted into an uptrend. You could say, Jake, you bought into a 15-minute downtrend today. Yes, that was true, but I was looking for the weekly longer time frame uptrend to take hold, right? So the majority of trades are with trend, and when they're not, right, it's usually because you're trading with trend on a longer frame, right? So rule number 2, the majority of trades are with trend. Hey, this Tesla short right here, would that be with the trend? Yep, that checks our second rule, with trend. Now, our third rule, when trading trend pullbacks, wait for a setup to trigger. Right? So when we are trading a trend, we need to find a way to actually enter or exit this position and have defined risk, right? So when we're trading trends, we know that we like to long potential lower highs or long potential higher lows, short potential lower highs, right? That's something we spend extensive time covering. That's rule number 3 for us. When trading a trend pullback, we wait for a buy or a sell setup to trigger, right? Ding, 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 right? Again, I love the way this is all of these previous lessons coming together and culminating for something absolutely beautiful, right? Now, our fourth and final rule, above all else, we want time frame confluence. Above all else, we want our time frames to be in alignment with each other, right? So Tesla here, we're looking at a short entry on this sell setup. 1, we got a level as our reference point. Check. 2, trading with the trend. on the 5-minute time frame for us on our entry, check. 3, when trading trend pullbacks, wait for a sell setup to trigger. 3, check. 4th, above all else, we want our time frames to be aligned with each other in telling us that the move we're taking has potential. Boom, check. All that analysis we did on Tesla, weekly chart, room to pull back. Daily chart just flipped into a downtrend. Hourly in a downtrend, opening underneath the level. That gives us these time frames aligning with each other, presenting a high quality trade opportunity. All 4 things there in alignment on Tesla, right? Now, to the flip side of this, let's now go to DKS, right? DKS right? If we enter our 4 rules here on DKS, 1, use a level or the opening print as a reference point. Up here, we have 142.37. That level was acting as our reference point, right? 2, trading with the trend. On the 5-minute chart that we were entering off of, or the 2-minute chart, we were trading with the trend. 3, when trading trend pullbacks, wait for a buy setup to trigger. Booyah. Booyah. And we had those in the 2-minute chart as well, which is what I actually ended up taking on this particular move. Right? 3, wait for those setups. Oh yeah, wait for those buys to trigger. Boom, boom. 4, above all else, we want the time frames to be in alignment with each other. Right? Weekly here was presenting a buy setup. The daily was presenting a gap over red breaking out of range. The hourly was opening above previous range and in an uptrend. The 5-minute was in a clear uptrend after this first bar of the day, right? Which means that this trade aligns with all 4 of our rules and presents us with a high quality trade opportunity, right? I really hope that these 4 rules, it starts to flow together the way that it's like it flowed together when I didn't learn these. I learned the system I didn't broadly invent by myself, right? But these 4 rules, this all way of teaching is 100% the way that I implement, right? I made these 4 rules because for me, I want these 4 rules. I needed something, some sort of structure. I needed some sort of way for me to say, okay, this is a good time to enter a trade. Okay, this is a bad time to enter a trade. Okay, this permits me to enter a trade. And these 4 rules will save your life, right? 1, level or opening print as a reference point. You think that that level is going to hold. You think it's going to break, reject. However you want to use that level for your thesis, you got to have one as a reference point. 2, trading with the trend on the smaller time frames. 3, when trading trend pullbacks, wait for that buy or sell setup to trigger, right? And above all else, 4, we want all time frames to be aligned with each other, at least have each other's backs, right? We want the time frames to at least be synced up, right? Because right now you could have argued, Jake, Tesla's weekly chart, is in an uptrend. I didn't want to short it because it was in an uptrend. Then I think we would have debates on whether or not this is technically an uptrend or a fail. I think we have debates on that. But what we can't have debates on, or what I think everybody would agree on, was the room to pull back, right? So the time frames being in alignment with each other and working with each other, right? Seeing that, hey, the weekly might not be in a full clean downtrend, but it has room to pull back, right? And if the daily and the hourly are in a downtrend, right, then ultimately we can find a very high quality trade off of this setup. So with that being said, my friends, that is the end of lesson 5. That brings us to a close for our strategic portion until we're going to circle. We're not done with strategy completely. We're going to circle back. Absolutely. We have a lot more to talk about in terms of building out a full watch list, building out prepping a game plan, right? We have more to cover, right? But the last 3 lessons, genuinely, if you paid attention, they will have changed your life, right? And if they haven't yet, you haven't rewatched them enough. Not a single student I have ever had, has not learned this stuff and then been like, this is the best system out there. And I don't mean to sound that cocky. I mean that to say that Literally no one has ever learned our system and then been like, no, I'm going to do something else, right? It works. It's going to take you now screen time to memorize it and understand it and have it seared into your brain. But in my opinion, that was an absolutely killer lesson. I thought there was so much in there. And again, I just saw a comment pop up for me and said, this is a must rewatch, still confusing to me. Like I said, there's a reason, GK, that we have all 5 examples from the previous classes, right? This is not supposed, like I said, I think I expect that you walked out of the levels lesson with a little bit more like, okay, I know how to get the levels. Yeah, you might have a few questions here or there, but for the most part, you walked out of the levels lessons, like, I get it, right? That's why I don't, even though I might do a different chart for different level of classes, I don't feel the need to share every levels lesson with you because largely people get it and it makes sense. This one is going to take several rewatches and several different examples for it to fully click the way you want it to. This is something that might not fully click the way you want for another month down the road. I promise everyone had to do that. I don't expect anyone to feel like I don't even feel like I'm learning. I learn something new every time I give this lesson. Right. So there is a very specific reason why I give, like, if you ask Jake, why do you give 6 different, this is why. I want you all to see this example. And for the rest of time, as long as I am doing this mastermind program, right, every lesson 5 that I do with the future class, you will get access to as well. So this is an ongoing process. I believe that everybody has to continue to learn multi-time frame analysis. All the former classes are going to get yours tonight, right? This is going to be something that you're all going to have a lot of time. You spend a lot of time practicing on, right? You need to, and it will be rather important. That being said, though, that is all we have tonight. If we could do a couple left fucking goes, I already saw him started, but we have to get him going wild. Oh my goodness. This is a thick lesson. I know it might be confusing a little bit, everybody, but I promise with rewatches, this is the one. Like, this multi-time frame analysis is the one. You just can't find this energy anywhere else. You can't. I encourage you to try, but you literally cannot. I love you all so much. This was a killer lesson. Thank you all so much also for the patience with me, as I know I have been less active over the last few days. Honestly, I drank coffee and took a little anti-anxiety medicine before this particular meeting, so I think I was fine. But I definitely have had, it's been a tough week, so I really appreciate the patience with me. I appreciate the support. I love you all so much. I will get this lesson posted soon. I am going to work on now getting all of the rest published on Kajabi, so stay tuned for that. All right? Thank you all so much. I love you all very much, and we'll talk very soon. All right? Cheers, gang.